Everybody was expecting a higher number, this is the problem. This is the second month in a row where we've seen inflation actually ratchet up. So it happened in April and now again in May. Most people in the market expected around 3.8, 3.9. It came in at 4%. So just 2 months ago we were down to 3.5% on a monthly reading. Now we're back up to 4. I mean, you have to caution, a little bit of caution here, because these are monthly figures, so they don't include the full basket of goods and services that the Reserve Bank relies upon to make interest rate decisions. That comes next month when we get the quarterly number. But we've now had 2 months out of the 3 months where we've seen inflation rise, so you would have to expect that the quarterly number will be stronger as well.
Right, and that quarterly number comes just before the RBA
That's
meets
right.
on rates.
In fact, they've coordinated the meetings these days to ensure that there's a key data point just before the meeting, rather than having meetings and saying, well, we've got to wait for the inflation numbers, next quarter.
Why isn't inflation coming down, given so many interest rate rises?
I wish I knew the answer to that, and I wish everybody, nobody really knows the answer to it. But it's not just here either. It's, Canada this month actually cut interest rates because they figured they had inflation beaten and it was on the way down. So they started an interest rate cutting cycle, and guess what happened last week? Inflation went up again. So, and for the same kind of things, services. So, goods and services, we've got goods inflation under control, but services inflation, no. So the couple of key ones: rent, there's health, insurance, all of these things that are really, and food as well. So all of the things that you really can't do without, they're essentials. And so you have to ask the question, well, okay, you raise interest rates again. Is that going to stop people from trying to live in a unit or a house? You have to pay the rent. Everybody has to put a roof over their head. So it's not an easy one to solve.
What do you think the RBA will do?
Look, there are some analysts out there who think that they've opened the door to a rate hike in August. I don't think that Michelle Bullock really wants to raise interest rates. I mean, she's quite, overjoyed at the fact that the employment market is still really strong. A lot of people have really got a lot of work. I mean, we've got employment levels at near 50-year highs. So that is one great thing that they've got in their favour. So we're not probably going to tip into a technical recession. But for a lot of households, it is really, really tough at the moment. They know that. We've got people who borrowed money through the pandemic at really low interest rates now selling out because they can't maintain the payments on their house, which was data the Reserve Bank released on Monday. So it's a very tricky time for the Reserve Bank. Michelle Bullock keeps talking about the narrow path, and it's getting narrower. Well, it's becoming a tightrope, really. And when you get to this point in the cycle, you always run the danger, okay, one more rate hike. Do we need to do it? And if you do and you tip the economy into recession, you're going to be forever blasted for that. If you don't do it and inflation takes off, you're going to be forever blasted for that. It gets to a very, very fine level of calibration about what you do.
Tax cuts, of course, kick in on July the 1st. It depends how people are going to spend that money, I guess, doesn't it?
It does. And, I was talking to an economist yesterday who suggested that the research that they had done suggested that a lot of people would be spending that extra money. It depends whether that's the case or not. I mean, if people do put that money away back into their offset accounts in their mortgages, then it won't be spent, and that won't fuel inflation. But savings rates have dropped alarmingly in the past 12 to 18 months. We had savings levels at record points during the pandemic, and now it's dropped from around more than 10% down to zero almost.
Yeah, and as we heard earlier, house prices are expected to go up 5% this year. In this rate rise kind of climate, why isn't the property market feeling more subdued?
Well, similar story to rents, really. You've got a lot of people looking to put a roof over their head and not a lot of supply on the market. I mean, we're not building enough houses to cope with the population increase that we have. We're running immigration levels at, record rates at the moment. So, you've got a strong demand there and not a great deal of supply. That results in higher rents and higher house prices.